Good morning, traders. Jefferson Fosse here with Walsh Trading. Happy Thursday, everyone. It is October 23rd. It's a couple ticks here after 7:45 here in the morning. Grain markets just paused their overnight session. Let's take a look and see what happened in the markets yesterday. What may have happened overnight, what might happen here today. Please keep in mind futures trading does involve substantial amounts of risk. Certainly not suitable for all investors, traders, or producers. So let's start off here with the fat cattle. December live cattle here down 560 yesterday. Feeders were the limit down here yesterday, 925 lower. They're both going to have expanded limits today, 1075 here in fat cattle and 1375 in feeders, so expect perhaps more volatility. All the weakness here came from the Trump administration's plan to lower beef prices. The market's not taking it well. It's a rather long statement. I'll have it there's a link going to be posted here to once you or there should be posted up above this video here on our website, so you can read the whole thing if you like. Yeah, in the long run, I'm not sure what that's going to do to increase the beef supply. The herd numbers were at 75-year lows, something like that here in the number of cattle that we've got here in the United States. It takes a while to rebuild that, and I don't see how anything that they've got here is really going to do that. There are good points to the program that I see in there, but I don't think it's really going to do anything to add supply. Still bullish this market long term. We have less cattle and more people to feed, period, in mind. But having said all that, short-term averages flipped over to the sell side here with yesterday's trade in the December contract in fat cattle. When I look at February and other back months, they're all doing the same thing. Most of the other months have gaps here up on the above the market here, where we jumped down from last Thursday to Friday's highs. We are getting very, very close to 50-day moving average support, and I think that's important. It's held, every time we've checked into that here, looking back at least till April, we've bounced out of that. Now in early April, we did see it get down a little bit and get down to the 100-day average before rebounding here. That may happen again, but I think the 50-day here, that's a 237.50, should offer some decent support. The 100-day, I've got a 227.57 reference to December contract that we do break down. Ultimately, that's where I would see long-term support here in the fat cattle here. But everything's turning weaker. Technicals are all pointing down. Big volume here yesterday, not the biggest. That was last Friday, but big volume down here yesterday. Stochastics pointing lower. MACD is still barely on the green side here, but that's about ready to flip down to the sell side here as well. Same thing with feeders. Short-term averages flipping over to the sell side there. Here, the January contract, you can see that gap up there at 376.75. Feeders are a bit more volatile than the fat cattle. They tend to overextend up and down relative to what cattle prices are doing. You've got 50-day moving average support there, 353.31 here. That's where that number finished here yesterday. And as you can see, that market, that average has been very, very strong support here. Well, going back to April when that average first appeared on the chart here. So I do think that fat cattle and feeders are going to eventually trend higher, but we might see some more margin liquidation, a little bit of weakness before we get there. I do understand that the cattle producers and the cattle markets are a little freaked out right now. Hogs down 87 here yesterday, inside down day, closing on their lows below the 5 and 10-day moving averages. Perhaps Tuesdays was just a turnaround Tuesday, a little bit of a dead cat bounce. Not a whole lot of extension to it. Hogs may push lower here in sympathy with the cattle markets. Still have a downside target of about 80.50. See if the hogs can get down to that 200-day moving average. Christmas corn pushed up to highs here, about 1 month highs here in the overnight session, getting up to 425.5. We're finishing the overnight though unchanged at 423. Yesterday the market had a strong day, up 3 1/4. Still can't get too far away from that 100-day moving average. It has been resistance here since, well, pretty much since May. Now we've been up above it here for what, 1, 2, 3, 4, 5, including today. 5 out of the last 6 days we've closed above it. We've traded above it 6 of the last 6 days. So maybe that's given us a little bit of support level now. That number is 420.5. not ragingly bullish here in the corn, but I do think they want to fill this gap here at 432 and 3/4, perhaps get up to 437, 440 or so in these corn. January soybeans are up 4 here this morning, 10.54, staying above that 10.50 mark. Yesterday they kind of traded both sides of it, had a high of 10.54 and a quarter, a low of 10.44 and a half. Roughly almost a 10-cent range there, but closed right at 10.50. The overnight low has been 10.49 3/4, so the market's staying strong. Apparently wants to stay above that 10.50 mark, at least over the past couple of days it has. Short-term averages 5 and 10 day, they flipped to the buy side here on Tuesday's trade. Market does look relatively strong. Perhaps the test of this trend line resistance here up around 10.75 here in the next few days and weeks. December soymeal, big day up here for it yesterday, $3.10 higher, clearing that 100-day moving average for the first time. Well, you got to go all the way back. We haven't traded up above that here since March. We've run into it as resistance a few times. Now we've gotten up above it this morning, got higher highs, higher lows, but the market did finish the night session here down about 80 cents at 289.20. Look for that 100-day moving average as a 278 or 287.10, sorry, to hold as support here this morning. Looking over to the bean oil, it's up 57 here. We're kind of on the low end of the trading range, choppy trading range that we've been in here for about the last month or so. If I draw a little trend line around there, you can see what I'm talking about. We're right down toward the lower end of that, bouncing up a little bit, up 57 here this morning in December. Yesterday they were down 58, so we're just kind of gaining back everything that they lost here yesterday. 5-10 day moving averages slightly above the market, might offer some resistance. Bean oil's got a little bit of an uptrend, but it's still just kind of very choppy. Chicago wheat continues its pattern of not going down anymore. It's not turned bullish just yet. Short-term averages are on the buy side. That was from Tuesday. Up 3.5 here yesterday, sharply sideways, unchanged here overnight. 503 3/4 in Chicago Christmas wheat. Long-term trend has been down. We need to see a little bit more strength here. This market might need a little bit better story. KC wheat holding up okay. It's up a penny and 3/4 here at 490 1/4. Also, at least for the moment, has stopped going down and hasn't kind of been doing that here for the last week and a half or so. It's been more sideways than anything else. Short-term averages are on the bullish side, but the overarching trend has still been down. Other markets that I've got new signals in here today, the silver market, it's recovering very nicely. It's up $1.18. It's been very volatile here the last week or so. It's down $3.19 here last Friday. Down here on Tuesday, $3.68, bouncing off a trend line support here yesterday. Got higher highs, higher lows here today. Markets, when they're at these high prices, tend to get a little more volatile when that is. See if this trend line support can hold. But my short-term averages are flipping over to the sell side here in at December silver. I still like this market from the long side, but you got to respect what the technicals say. Here also in the energy markets, I've got new signals in. Crude, it's up 268 here this morning. Big jump higher, having to do with the U.S. is implementing stricter sanctions on Russian oil. That came out yesterday in the afternoon after the toward the end of the trading session. I didn't see that when I did my weekly video here yesterday afternoon. Short-term averages are pushing higher here, turning up to the upside in crude, RBOB, unleaded gas, and diesel, which are all up strong here this morning, all off those Russian sanction numbers. My charts are flipping to the buy side on those markets. I do appreciate listening, folks. If you have any questions, comments, reach out, let me know. I can help. If you like what I'm saying here, please like, subscribe, and share this with everyone that you can think of. Thank you. Have a great day.